Welcome back. I'm very much looking forward to our next presentation. We have Ian Prentice, Managing Director of Technology Metals, crossing to Ian now.
Many thanks, Amy, and thanks to Phil and Des and the team for giving us the opportunity to talk about technology metals and our Gabanintha Vanadium Project. Our disclaimer page. Now, technology metals, we, as I say, got the Gabanintha Vanadium Project, and our vision is to be one of the lowest cost, highest purity producers of vanadium in the market, and based on developing our Gabanintha Vanadium Project. So, Gabanintha is in a Tier 1 location in Western Australia. We've got a very large high-grade resource, importantly with fresh ore at surface, which I'll touch on a bit later why that's so important. We completed a definitive feasibility study last year, a little bit just after the previous Noosa conference, and that included a continuous pilot plant scale test work, which is again very, very important for de-risking the project. Very well advanced in progressing offtakes for the product, and we announced a binding offtake a few months ago, around 2,000 tonnes per annum, about 13,000 tonnes per annum forecast production, and we're also very, very advanced on our project funding scenarios. Just a quick overview of the corporate situation with the company. We've enlisted around about 3.5 years now. We've got $3.2 million in the bank, having completed a small capital raise, $2 million capital raise at the beginning of June. So still a very good tight register, 122.4 million shares on issue as we speak. A good experienced board with some good, I guess, experience within vanadium as well as general mining experience. Importantly, our project director, who's not actually on the board, but he's the project director looking after the progression of the development of the project, Mr. David English, has had a lot of experience in building significant projects in Western Australia and taking them from feasibility through to construction and commissioning, but also very importantly, he's been involved in vanadium operations as well. So very, very key component to our management team. So fantastic location, as I mentioned, the Midwest of Western Australia, rated as the #1 mining jurisdiction in the world. Fantastic infrastructure. We'll need quite significant amounts of gas to run our operation, and we've got a lot of gas infrastructure within proximity of the project. So we're working through getting some of that gas brought to our project. Water supply on site, which is very important. So we've got a paleo channel just to the north of the plant site. So we're just in the final stages of defining that at the moment, but that's a real big tick for us. We're going to be an integrated project all on site. So it will go from mining all the way through to our final product on site. Then that final product will be put into sea containers and trucked down the highway to the container port down at Perth at Fremantle Port. Very small volume, high value products, which we'll be shipping out in, as I say, in sea containers. The last point there is very, very significant. You know, we are a regionally and nationally significant project, so quite a substantial capital cost to build our project, but also therefore a large employment opportunities, and we're going to make a meaningful difference into this part of the world. Just a snapshot of the results of the feasibility study last August. One of the highest grade resources in the world, so 1.1% of Fe2O5. We've just updated that resource, and I'll touch on that shortly. So the reserve from the feasibility study, we're also in the process of upgrading that through the work we're doing at the minute. But again, a nice large reserve, high grade reserve, which supported at the time a 16-year mine life. Operating rate of around about 28 million pounds per annum, 13,000 tonnes per annum. The high purity that I touched on at the very beginning, greater than 99% purity product, and that is very, very important to differentiate our project from a lot of the other vanadium production in the world. Operating costs, lowest quartile, so $4 a pound is lowest quartile within the vanadium industry, and we're working on getting that even lower over the next little while. So just, I guess, looking at the resources and where they're located, simple open pit mining, I guess that's one of the key takeaways. Very low risk from a mining and mining engineering side of things. That initial reserve based only on the northern block area, as you can see on the map there. We've got the northern block, which is the bulk of our resources, about 110 million tonnes, which supports that initial reserve. We've recently announced an updated resource for our southern tenement, around 28 million tonnes there, but really importantly, we've got our maiden indicated resource from that part of the project, so 9.6 million tonnes at 1%. So that all goes into an updated overall resource, which is our 75 million tonnes at 1.1% as an overall high-grade resource, which is going to support a very, very long mine life. We're in the process right now of moving the indicated resources down in the southern tenement into reserves, and we'll be able to deliver an updated reserve position, which we expect will extend our mine life well beyond that 16 years and into the 20 plus year time frame. So really important delivering that resource update in the last little while. You can also see on the long section on the bottom of that slide, the northern block long section. The yellow is the indicated, blue is our measured resources. So that's the basis of our ore reserve as it stands at the moment. The red is our inferred. The white dotted line there is where the current pit outlines are for the from the DFS. You may be able to make out on that figure there's only currently 3 drill holes below the existing pit shells. So with a little bit more drilling there, we'd very much expect that we'll extend that those pits at depth, therefore pushing that mine life out even further, increasing that reserve. Touched on a little bit the metallurgy of our project. So shallow oxidation is very, very important. You can see in the cross section that we have a very shallow oxidation profile. So we're into our transitional and fresh material very early in the mine life, which is very, very important from our processing point of view. So it gives us maximum recoveries into a magnetic concentrate, which then feeds into our roasting kiln. So our yield into a concentrate is very, very high based on our fresh and transitional material. So having a minimal oxide skin sitting on top of our transitional and fresh is very, very important. You can also see the simple geometry of the ore body. So dips at around about 55, 60 degrees, ideal for open pit mining. Outcrops for the majority of our strike length of our ore body. So we're straight on ore and then very simple open pit mining. The plan view on the left-hand side of the screen shows the plan view of the pit outlines, but also the extensive amount of drilling we've done. So we've done something like 22 kilometres of drilling over the last 3 years, of which 16 kilometres is RC, and importantly, over 6 kilometres of that is diamond drilling. So we've put a lot of effort into understanding the geology, the metallurgy, and also the geotechnical parameters for the open pit design. So an extensive amount of work has been completed. One of the really interesting components of our project is the grade, as I say. So we're a high grade ore body, and we'll be feeding, based on the feasibility study, we'll be feeding plus 1% V2O5 into our processing circuit from the very beginning of our mine life. So 12 years of plus 1% V2O5. The addition of the southern tenement and that additional resource that I've just been talking about, we expect that will add somewhere in the order of 3 to 5 years of additional 1% feed into that mine life. So really keep that high grade feed going for a much longer period of time and underpinning the economics of the project. Now, part of the feasibility study, we're very focused on making sure that we've got a very good handle on the metallurgy and the processing parameters of this ore body. So very, very important in vanadium. It's, as I say, the first step is quite straightforward. We're producing a magnetic concentrate from a magnetite ore body, so reasonably straightforward process. The next step is the real key to understand the metrics of that. So what we did is collected a bulk sample, 11.5 tonnes of material, which we put through our beneficiation circuit to produce a magnetic concentrate representative of the first few years of our mining operation. We then sent 7.5 tonnes of that concentrate up to the USA to run through continuous pilot testing through a kiln. So kiln operated by FL Schmidt, who are now our partners in continuing to develop the project. FL Schmidt are really experts in the roasting kiln area. So they ran continuous roasting tests on our magnetic concentrate, and that really just confirmed that all of the recoveries and operating parameters that we'd defined in our test work, laboratory scale test work, was all absolutely confirmed at this larger scale with the continuous roasting completed by FLS. So importantly, FLS have been involved in that test work process. They've been involved, therefore, in taking that test work through to kiln design and also the operating parameters, which we've used in the DFS. So really important partner, and we've recently announced that we've engaged with FL Schmidt as the supplier of the kiln. So we've actually entered into a supply agreement with FL Schmidt to supply the kiln portion of the processing plant. Really key, a key step, a key milestone for our project. I guess another really key area for any project like ours is securing customers. So we've been working with customers for a long time now. Since the very beginning, early on in the stages of the project, we produced final product, and we've been sending that final product off to potential customers. So those little jars there of the orange powder is the V2O5 product that we'd be producing. Very, very high purity, as I mentioned. So 99 to 99.5% V2O5 purity. So that's moving us through into actually securing binding offtake agreements. So we announced earlier this year a binding agreement with a blue chip Chinese company, China Non-Ferrous, for 2,000 tonnes per annum. As it says there, that's only around about 16% of our annual production, but a really, really important partner to be engaging with around offtake. Subsequent to that, we're now moving through 2 other MOUs in the offtake space with Shaanxi Fengyuan, a Chinese steel alloy producer, and for 3,000 tonnes per annum, and a group, Big Power, which is it's a VRFB battery group for 1,000 tonnes under a take or pay arrangement, and up to 5,000 tonnes of volume. So we're looking there currently under binding contract and MOU. We have somewhere between 6,000 and 10,000 tonnes out of our 13,000 tonnes of product covered. So we've made a very, very good headway into establishing those relationships with our customers and establishing frameworks for delivery of product into those customers. One of the really important things with Big Power is in that development of the battery space, and we're really pleased that part of the MOU with Big Power is actually developing around a business to produce electrolyte. So we believe that we can produce electrolyte, vanadium electrolyte here in Australia to feed into batteries that can be installed here in Australia. So we're partnering with a leader in that field, with Big Power, with their technology and our high purity product to actually produce this electrolyte. So very early stages still with them. We're working through what that actual structure of a joint venture with them would look like, but it's a real key milestone and diversification of our product mix. So just on what is vanadium used for? So still the vast majority of vanadium goes into the steel industry. So alloy and steel, so strengthens steel, corrosion resistance, seismicity. So very, very important component to be alloyed into the steel industry. But the really strongly emerging sector is the vanadium redox flow battery sector. There's also specialty alloys that go into aviation and the chemical industry. But we believe the real big growth sector over the next few years is going to be into the VRFB sector. So not a big consumer at the moment, but as I say, something that we believe very strongly in, and therefore the engagement with Big Power on an MOU to really look at doing some downstream processing of our product to feed into these VRFBs. So just a snapshot. So they're stationary storage batteries. So we're having a big push globally into harnessing our renewables more efficiently and more effectively. And the VRFB is one of the solutions for stationary storage. So grid-based solutions that will tie into your solar or your wind farms and really help with making that solar, that sort of renewable energy sources far more efficient. It's massive benefits for a VRFB compared to some of its competitors. Long lifespan. Vanadium is 100% recyclable at the end of the project, so end of the battery's life. So a 20-year battery, end of that life, it's fully recyclable. So our I guess our footprint over the life of that is very, very important, that we can take that vanadium and reuse it somewhere else. So a really, really big growth part of the market as we see it. So the vanadium market, where are we at? This chart doesn't really take into account what we've seen in the last sort of 3 to 6 months with the COVID pandemic and the impact that's had, particularly in Europe and in North America. But if we sort of look beyond that, what we've seen in China as China's come out of the COVID pandemic, their consumption of vanadium has really taken off, and that's very much based on their steel and their steel consumption increasing dramatically in post-COVID and really around I guess the need to get out and stimulate the economy. So we see a big gap emerging in the supply-demand equation, and that's where we see the primary producers like ourselves emerging to fill that gap. We don't think the existing capacity can expand anywhere near enough to take into account that emerging demand gap, and so we certainly see ourselves as one of the key people in that group. And from a project point of view, we see ourselves as one of, if not the closest to being able to come along and fill that space. So the market dynamics, this chart shows some forecast cash costs. You see the blue dotted line is the current market price. The orange line is the cash cost as we see it today. Really strong fundamentals in the vanadium market going forward, and we think that coming out of COVID that we will see a lot of stimulus spending globally. Once Europe and the US emerge from the COVID pandemic, we see a massive growth in steel consumption and also in the vanadium redox flow battery sector. So where are we at the moment? So the Southern Tenement Reserve estimation is well in hand, and that's, as I say, we expect that will give us a plus 20-year boost to our mine life. We're working away on securing some more offtakes and engagement with the vanadium market, and also pushing hard on our vanadium flow battery strategy. We are heavily engaged with government around the approvals process. We're engaged with the Northern Australian Infrastructure Facility on funding scenarios, and really moving ahead on that side of things. And as I say, the engagement with FL Schmidt is also very, very important in that regard.
Okay, we will have to finish up there. Thank you so much, Ian. He will answer your questions if you jump onto the Technology Metals company description on our website and follow the contact links. We'll be back soon with our next presentation.
Thank you, Amy.